Welcome to G Theory from Eagle Harbor Advisors. I'm Garish Navari, or G. This is our latest insights on the state of AI. This month's theme, the attention tax. There's a kind of scarcity in this market that doesn't show up on any balance sheet. Very simply, that is attention. For 3 years now, nearly every serious investor's focus has been pulled toward a single story, artificial intelligence, and the chips, power, and data centers behind it. That focus has been mostly right. But it has a cost, and the cost is everything it left behind. Think of it the way a small town changes when one big employer moves in. The factory booms, wages there climb, and every ambitious young person heads for its gates. Meanwhile, the shops on the other side of town, still open, still profitable, can't find workers or customers because all the energy went one direction. Nothing is wrong with those shops. They've simply been starved of attention. That's roughly what has happened beneath the surface of the stock market. Capital is crowded so heavily into the AI trade that ordinary, unglamorous sectors have become underowned and, just as important, understudied. When nobody's modeling a company closely, its stock price and its actual business can quietly drift apart. Historically, that gap between a forgotten estimate and a moving reality is where patient investors have found some of their best opportunities. Picture where the attention went. On one end, the AI complex, crowded, heavily owned, exhaustively studied. On the other end, quieter corners of the market, things like senior housing, live events, exchanges, parts of fintech, and the airlines, cited as examples of areas the crowd stopped watching. To be clear, naming a sector isn't a recommendation. It just illustrates the idea that attention, like capital, has concentrated in one place. None of this requires a dramatic call. You don't need a view on where AI ends up or when. The observation is narrower and steadier. A market this concentrated tends to be a market prone to sudden, positioning-driven air pockets. Sharp 10 to 15% pullbacks that owe more to everyone standing on the same side of the boat than to anything actually going wrong. And when that crowd shifts, even briefly, money often rediscovers the parts of the market it had written off. Now, where does that leave our stance? Within our asset shield framework, we describe 3 postures. Full sale, that is, remain fully invested when the broad uptrend remains intact. Reduced sale, which means trimmed equity exposure warranted on sustained broadening deterioration. And lastly, safe harbor, a defensive posture reserved for broad, persistent weakness where capital preservation comes first. Today, we remain at full sale. The broad uptrend is intact. So what does this mean for your portfolio? This is really a case for the oldest discipline there is, diversification. When one theme dominates a market, the quiet risk is that a portfolio ends up far more concentrated in it than its owner ever intended, because the winners grow until they crowd everything else out. Staying at full sale doesn't mean chasing the crowd into the corner it's already packed into. It means owning a genuinely broad mix so that a positioning-driven drop in the popular trade doesn't dictate your whole year. And so you still hold the overlooked parts of the market if attention swings back their way. Participate in the boom. Don't let it quietly become the only thing you own. The crowd is loud, and it's mostly pointed one direction. The steadier plan is to stay diversified enough that you don't have to be right about which way it turns next. Please follow me to be updated on G Theory and AI. To learn more of our proprietary global AI investment model and how to benefit from our research, reach out directly by phone at 561-576-8284 or by email at gnavar@ehadvisor.com. I'm G with Eagle Harbor Advisors. Plan, protect, prosper. A few important notes before we go. This commentary is adapted in part from third-party commentary by Citrini Research and reflects our interpretation and editorial summary for general educational purposes only. Sectors were named only to illustrate that sources' thesis about underfollowed areas of the market. Naming a sector is not a recommendation to buy, sell, or hold any security sector or strategy. The stance labels you heard describe general portfolio postures within a rules-based monitoring framework. Diversification does not ensure a profit or protect against loss. Past performance is not indicative of future results, and investing involves risk, including the potential loss of principal Please consult Eagle Harbor advisors and your tax and legal professionals before making investment decisions. The content is developed from sources believed to be providing accurate information. The information in this material is not intended as tax or legal advice. Please consult legal or tax professionals for specific information regarding your individual situation. Securities offered through Kestra Investment Services, LLC, member FINRA, SIPC. Investment advisory services offered through Kestra Private Wealth Services, LLC. Eagle Harbor Advisors is a member firm of Kestra Private Wealth Services, LLC, an affiliate of Kestra IS. Eagle Harbor Advisors and Kestra IS are not affiliated. Neither Kestra IS nor Kestra Private Wealth Services provide legal or tax advice.